I was talking to a gentleman and I thought it would make a good educational video. Situation was this. The gentleman's been investing from 2004 until now, has several different accounts. Several of his accounts, of course, have made money from that point in time until now, which is not unlike this particular mix right here. This is just a sample mix of a fairly well-diversified portfolio. So he's actually made money from 2004 until now in most of the accounts, but he had one account that had actually lost money, and it drove him crazy to the point where he said, I want to take some money and I want to go and I want to stick it in a safe place, and he was asking my advice as to what a safe place would be. Well, I know what he's talking about, putting the money in like CDs or treasury bills or something like that. Now, to me, safety is there's much more safety in equity-based investments, particularly because we get protection against inflation and currency risks and things like that. I talk about that in other videos, how what we want to do is we want to protect ourselves, because if the dollar devalues, as it does over time, against other currencies and in general, then what happens is we lose money over time when we put money in quote-unquote safe investments. Well, basically what was happening is he was wanting to move a significant amount of money, especially due to recent market downturns. He wanted to move it into cash. Well, what was bothering me is, why did he lose money in this one account? Because he'd been investing just like the other accounts since 2004. Well, as I did a little digging, I found that he had actually pulled money out during the last market downturn in 2008. So much so that the amount of money he had pulled out actually caused the whole account to suffer a negative return from day one. So literally what was going on is he had broken the golden rule of investing. We need to buy low, sell high. That's the idea. That's what we want to do to be a successful investor. But because his instincts and emotions took over, he actually panicked and yanked money out of the account during a market downturn. So the moral of the story is, one of the things that we want to do to be a successful investor is to stay disciplined. Don't allow our instincts and our emotions or what we think is going to happen in the future and our concerns and our fears to drive the bus. What we do is we want to take action. When we're in fear, we're in a hot state, we like to take action, and many times the best action to take is nothing at all. That's the story for the day, that's the moral for the day, or the message for the day, I should say. We'll catch you next time.